Now, African countries have recently come out with inflation data, with Zambia being the most notable at 6.6%. Joined now in studio by Leon Myburgh, who's Sub-Saharan Africa Strategist at Citi, for a look at the inflation data from East Africa. Hi, Leon.
Good morning.
Looking at just big picture numbers, it's interesting for us. We've been bumping at around 6% for a while. So is Zambia, but Kenya has doubled that rate at 12%. Uganda is 18%.
That's correct, yes. I mean, the big story in East Africa, has been one where currency weakness spilled over into local inflation dynamics. You also had lots of problems with food inflation, which filtered through. And there's a slight difference in story in what we have between Kenya and Uganda specifically, where Kenya had a central bank who was very reticent to acknowledge that there was an underlying inflationary problem, and they were very slow in reacting to what was growing inflationary pressures during the course of 2011. So at that stage, inflation had peaked just sub of 20% at its highest. And eventually, the central bank capitulated and said, we actually need to tighten policy, we need to react to this. And they came very late into the game, but now...
Did they then have to act dramatically to try and catch up?
Indeed, they did. And by their own standards, by their own historical standards, their policy rate at 18% is unprecedented. And certainly we saw even the parliament get involved with criticising the central bank in terms of how it reacted to what was growing inflationary problems. I mean, in contrast, what you had in Uganda was a central bank that was a lot more proactive. And even though the inflation peaked at a lot higher level, I think we got up to around about 30% at one stage. But their inflation is notoriously more volatile than Kenyan inflation.
Why is that?
Well, it's very tricky, because when you try to understand the actual forces of what triggers inflation in Uganda, ultimately it just seems to be it's a case of imported inflation from Kenya. And you'll find that the Ugandan inflation trends are very related but more pronounced than the Kenyan inflation. I think that is because the Ugandan economy is a much smaller economy than what Kenya is. And whatever happens in Kenya, it's the old case of, Wall Street sneezes and the world catches a cold. In this case, it is Kenya sneezes and Uganda catches a cold in a sense when it comes to the inflation dynamic. And you find that the Ugandan inflation is very volatile. But the reality is it necessarily triggered by currency weakness? Is it triggered by local monetary events? Of course, at the margin, those do play a role. But overall, the trend seems to be a function of what goes on in Kenya.
How does it relate to growth in these countries? Because we often hear that allowing high inflation, printing money, there's a trade-off for growth. Of course, inflation's the enemy of the poor and the unemployed who scratch to make a living, particularly with food. So people talk about the African growth story. We in South Africa would love to have the growth rates of some of these countries.
Well, I mean, the inflation, I think the history of inflation data in Africa is slightly troublesome. You've had long periods in which the headline inflation rate was calculated by antiquated means. A lot of the countries have gradually morphed into global accepted practice in terms of inflation calculating, for example, moving from arithmetic to geometric mean calculations, things like that. But equally also have problems with baskets, the weights of the different baskets. The expenditure surveys happen to be very infrequent. And ultimately you sit down and you say, but the inflation print that you see, how accurate is it a reflection of the actual inflation? At times it is a little bit, tenuous.
Who's the best of them in terms of the way they determine it and calculate it?
Well, I think Kenya has made quite big strides in this region that we're looking at. Kenya has certainly made big strides in fixing up their process. Uganda was quite a late entrant, where it quite recently, I think as recent as last year, where it revised its methodologies in bringing it into line with global best practice. But at the same time, inflation is very volatile in these countries, and it is ongoing work. I mean, we're trying to bring our own improvements in South Africa.
You mentioned Parliament getting involved. Politically, how hot is inflation a topic in these countries? Well,
it varies. I mean, it is more often a case of what happens to interest rates, and what actually happened was that in Kenya, you saw exceptional currency weakness, and you saw the politicians getting very worked up that it was a central bank that did not recognise underlying problems. In Uganda, it was in fact the opposite, where the central bank had been a lot more proactive and aggressively tightened policy in the face of growing inflationary troubles, and there the pressure was for them to reduce interest rates, as opposed to in Kenya where it was to increase interest rates. So certainly it is a hot topic in those two countries specifically. I mean, it's less so the case in in a country like Zambia or Nigeria. But in those two countries, because of the volatility of inflation and therefore the volatility of the policy rate, it has certainly been a very, very hot topic, particularly towards the end of last year. Now, what I think ultimately happened was that Uganda had because of the political pressure, had cut its policy rate too soon at the start of this year, when they moved from 23 to 22% in February, now down to 21%, and they realized it was too quick. So since February, policy rate has been unchanged.
What about trade union pressure? In South Africa, we have COSATU. Their members like big increases, and the higher inflation is, the better your paycheck looks, and as long as you keep getting above inflation increases, it's wonderful, never mind the economy. Yeah. Union pressure in these places? Populist pressure?
It doesn't really play so much a role. I mean, certainly you have political pressure which comes in, that we've just discussed, but you don't necessarily find it so much from a union point of view. I mean, tracking things like, average wage increases, wage demands, average wage settlements, those are very difficult in these countries. You just simply don't have that type of data as you do in South Africa.
What about Zimbabwe? Maybe you don't have those numbers, but we had trillion% inflation in Zimbabwe for a long time. Then they got rid of the Zimbabwean dollar, and they've effectively got the US dollar and the rand. What is the effective inflation rate there, thinking of them as a neighbor to Zambia?
Yeah, I mean, it's tricky. I mean, they certainly had to go through exceptional measures to contain what was a humongous problem for the salaried worker, taking place there, and they had to resort to extraordinary measures. I mean, fortunately, none of the other countries that we look at, and then specifically Zambia, don't have the same problems. But I mean, the interesting thing in Zambia is that they have just gone through a big political change, where they've had a change in political leadership last year in the election, which has led to a number of questions being asked, and amongst others, you started to see the currency slip, and also we've seen more aggressive policy intervention when it comes to, for example, wage settlements, fiscal spending, and that type of nature. Now, the concern in Zambia is that in the medium term, these forces may contribute upside pressure to inflation. So yes, the number is very low at 6.6. It now happens to be the third or fourth month that it's actually posted a consecutive increase. And the concern is if the currency in Zambia, which is a very open economy, with the currency weakening at about 11–12%, at what stage does this start filtering through to higher inflation? And our worry has always been that the inflation was too low, and that there would, all the balance of risks in Zambia are to the upside.